Yeah, good day to all. I'm D. Murali, uh, an AMFI-Registered mutual fund distributor, and this is Dharani Capital, your financial learning partner. Today topic is evaluation of the mutual funds, a crucial process every investor must follow to ensure their investments stay on the right track. See, the process is not only selecting the right mutual funds, but it is to be reviewed on a regular basis so that you will take a decision. Okay, we will go to the video now. So we are going to study about the evaluation of the funds. Why to evaluate the funds? Investing in a mutual fund. Okay, first process is to choose the right and correct mutual fund to fulfill our goals. But it's not a one-time selection alone. It is equally important that every time you have to evaluate its performance regularly, at least 6 to 12 months. 6 to 12 months, you have to regularly evaluate the performance of the fund. A particular fund underperformance, we must decide whether to hold or switch to the other fund. The goal is to get the maximum return, minimum risk. That is the goal. Okay. So this will be achieved or it can happen only when you start evaluating the performance of the fund regularly. Then only this will happen. Okay. Now, what are the now we have to consider the not only quantitative parameters. See, you have to evaluate in such a way that if the same fund gives the same kind of return, you have to choose a fund which is less risky. So when suppose blue chip fund is there, and also small cap funds are there, but when the returns are the same, then you have to choose blue chip fund where risk is comparatively lesser. So this risk adjusted parameters you have to study always. Okay. See, this we are how we are evaluating the mutual fund performance means we are always comparing it with the benchmark. Okay. Suppose the Sensex or Nifty gives you say 15%, the mutual fund also should be given more than that the market. That is why we are investing in the mutual fund. This the mutual fund how to that extent the mutual fund performance over the benchmark is called the alpha. Alpha must be higher. Okay. So this is what is so this is the qualitative factors you have to consider. Next we will consider. Okay, now comparison to peers. I told whether your fund you have to evaluate your fund that whether the fund is outperforming the index like Nifty or Sensex. If it is there, you can continue that fund. Otherwise, you have to consider the shifting to the good fund by comparing to peers. Peers means what? You should compare the apple with apple, not with oranges. So when you are selecting a particular sector fund, sector or thematic or large cap or small. Okay. So, but actually, a good mutual fund consistently beats its peers. Review how the fund performs across different economic cycles, not just during a short-term rally. Sometimes rally will be more, but it's not like that. Over a period, it should give the good performance. Okay, now financial measures. Some important measures you have to, while selecting the fund, you have to verify some important measures. One among them is expense ratio. The expense ratio lower is the better. Okay, you have to verify that. When you are selecting the funds and you have to verify the expense ratio also. Second is the Sharpe ratio. Sharpe ratio is measures the return of the fund over the market, over the risk-free rate and divided by is the standard deviation. So it is taking the risk factor as well as the reward factor also. So Sharpe ratio also you have to consider very seriously. Apart from that, ratio is there. Sortino ratio. It's a very interesting ratio. It will consider the risk when downfall is there. Standard deviation, whenever downfall is there, it will account it and it will Sortino ratio. Apart from that, trainer ratio. The trainer ratio considers the beta. Beta is the responsiveness of a price of the stock with the market. Okay. So the trainer. So these kind of financial ratios you must know so that and you have to apply for evaluation purpose. Is quantitative. Now we will consider the qualitatives. See, numbers tell half the story only. The rest comes from the qualitative assessment. First, portfolio quality you have to analyze it. Are the holdings are diversified and of high quality? These two parameters you have to see that it is well diversified and with a high quality shares. Second, fund managers competence. Who is a fund manager? What is his experience? How consistently he is able to perform the funds to give good return and conviction matter. Okay. Third, fund house credibility. Who are the asset manager, asset standard manager? How well do they manage customer services? Most important, redundancies and transparency. All these things and all speaks a volume when we are going for the so evaluating the mutual fund is not complicated, but it is very essential. Use both the numbers and the insight. Choose the right fund. Stay invested and review periodically. Okay, I can help you selecting your portfolio. Connect with me with Dharani Capital. We are doing that one. Okay. Now, yeah. If you like this video, please subscribe to Dharani Capital for more financial thoughts. Let us build your financial future together. Thank you for watching.